Hey folks, Dan Frio here, your nation mortgage loan officer. Today we're going to discuss how can you, when can you, does it make sense when it comes to refinancing? Because we help a lot of people buy homes, but the problem is then once they buy it, they really don't understand where to go from here. Are we stuck with this rate? Can I refinance? What's the cost? And so forth. So I got one question for you guys. As you guys come in to watch the event, please answer one question for me. I'm going to put down here. I'm going to put up a couple quizzes today for you guys to watch. So first thing we're going to do is right through here. How often can you refinance? So please answer that question as you guys come on. But what we're going to talk about in today's video are the top 10 reasons, most people have questions when it comes to your refinance. So without further ado, let's get over to those questions. Well, first off, let's do this. Let's figure out what is going on with interest rates and the whys behind it. Okay, so let's take a deep dive into that first. And then the next thing we're going to do is figure out, how low they can go, and then we're going to start talking about those questions for you. So what's happening behind the scenes right now? Well, mortgage rates, here's what they're doing behind the scenes. And so you guys understand this rate on here on the 30-year fix. Oh my goodness, let me pull it up on the screen. We got to go back to this screen. Okay, so what you're seeing on the screen right now is the 30-year rates. And I can only fit so much on the screen at this point. So right over here, we basically have rates at 6.8%. Last year, about October of 2023, these were 8. Okay, so the point is now I want to teach you guys how and when can you refinance. So as you guys come on, please answer the question over there to the right. How often can you refinance? So let's go in and figure out some different things. So what I did is I'm using a couple different systems here, folks, and you guys have to try this new system. It's called, I know it's a Chinese thing, but it's called DeepSeek, and it's fantastic. So what I did is I put in there, and I'll show you what it did behind the scenes. You can do all this behind the scenes. So I put there, what are the top 10 questions homeowners have when it comes to refinancing their mortgage? And then I gave us some specifics, and then here's what it comes up with. So for these with you today to kind of debunk a lot of the information out there when it comes to refinancing. There's different ways to refinance. There's different, there's different ways to refinance those. Some are really simple. Some are real pain in the butt. Some are really cheap. So let's kind of break down the top 10 questions. And then what we're going to do is we're going to go over kind of dissect each individual loan program that you guys might have and how you can refinance it and when can you refinance it, and basically a lot of questions in regards to that. So as you guys come on, please let me know where you're visiting from, what state, maybe what city, but let me know the answer to the question over there. How often can you refinance? 1 time? 2 times, 3 times, just put that over there on the side. So here's what we're going to talk about today, the top 10 questions. Let's go down through here and we're going to briefly describe these. And then we're going to go over and we're going to take a kind of a deep dive into each loan product, because if you have a conventional loan, well, it's much different than an FHA loan, which is different than a USDA loan, which is different than a VA loan. So let's get to today's news. So top 10 refinancing questions that you guys might have. And as you're going through this, please ask any questions that you have. That's why we're doing this live, so you can Q&A and get some real answers. So the first thing is, when is the right time to refinance? Well, there really is no right time. It's kind of like, when's the right time to buy? Well, if you're watching this video, you bought the house, or maybe you're buying a house soon and you're saying, okay, how refinance stuff work? Well, the right time is when you can save some money. But it depends also on your mortgage product. Okay, so you can refinance a conventional loan. If you're just doing a rate and term, there's different terminologies with all this. But if you have a conventional loan, you can refinance basically right out of the gate if you're not looking to pay and put any money back in your pocket. So when is the right time to refinance? Well, whatever's good with you, and whenever that spot hits where you'll save the most amount of money, your break-even point's going to be low, and it's just it's individually up to you how much of a savings is a true savings. So when is the right time? It's going to depend on you and also the markets, okay? Because rates have been coming down, and that's why I'm doing this live event, because we have a lot of people calling in saying, Dan, I'd love to refinance, but again, you have to pay attention to where the rates are. Let me see if I can narrow this down a little bit. Well, let's go to it. Let's go back to this thing. How much money are you saving, or what's your rate is? So for example, we have people calling in, their rate's at 6.5 right now. Current rate right now is 6.8. It's not a good time to refinance. When you start watching my videos, and every day you see on the screen there, whatever product you have, it could be conventional, FHA, VA, USDA. Once that rate hits about 0.5% lower than what your current rate is, well, then reach out to us, and then we can dissect a lot of these questions that you might have going forward. So let's go to the next question. What are the closing costs and fees? This is one of the biggest pieces of, or the biggest challenges it is when it comes to refinancing. No, a lot of people put it off because they're like, okay, when I bought the house, it was tough. It was daunting. It took me, a month to get through, a ton of paperwork, a bunch of money. The closing costs were insane. A refinance is based, well, depending on what product you have, it could be really simple, or it could be very similar to what it was when you bought that house, depending. But the closing costs are usually a fraction of what you pay when you're buying that first house. For example, I'm in Illinois. Okay, if you bought a house, I'm closing on a loan on Tuesday for a young man. It's a $530,000 loan or home. He's refinancing to a lower rate. His title fees are $995. Okay, that's his title fees. If he were buying that property, it'd be about $6,000. Okay, so that's the variance that you have in the fees. Okay, so depending on what product you have, for example, if you have a conventional loan, you're most likely, and probably 80% of the chances, you're going to have to get an appraisal done. That could be $600-700. If you have an FHA loan, a VA loan, or a USDA loan, when you refinance, if you're not looking to take out any money, they're the closing costs are a fraction of what it is, but you probably don't need an appraisal fee. So that might save you right there $650. So we're going to dissect a lot of these other things, but the closing costs just in general are just a fraction of what they used to be or what they were when you purchased that house. Let me get through the top 10 questions. And then what I'll do is I'll go through and answer any questions that you guys got. And then we're going to take a deep dive into each one of these programs. So if you guys have questions, please load them up. But let me know how many times you think you can refinance your mortgage. That's a question I posted as the host right on the chat screen right through there. Okay, what is the break-even point? I'm going to show you actually a calculator that we did, and it's right through here. I'm going to demonstrate a file that we have. Let me see if I can shrink this. I'm going to demonstrate a loan that we're working on right now to show you guys what the prices are, what the costs are, and everything else. So we're going to go through an example here in a second. So that's going to be, and that'll tell us what the break-even point is. That's basically, did you have to pay for an appraisal? If you did, it might be $600-700. If you didn't, $100 you didn't have to pay. So there's a lot of pieces of this puzzle, and the more the costs are, well, probably the longer it's going to take that break-even point. But a break-even point is a great way to check and see deal for you. What types of refinancing options are there? There's difference between rate and term, cash out, streamlines. This is the biggest piece of the puzzle that a lot of people just don't understand. And that's why I figured I'd talk about it. So there's variances. One is called a rate and term. You can see that right on screen. One is called a cash out. We're going to stay with those two first because those are normally what you're looking at when you're looking at a conventional loan. Strictly come into play when you're looking at a government-backed loan like FHA, VA, and USDA. Okay, so the rate and term is this. Like, for example, the young man we're working on right now, he has a $500 and like about a $303,000 loan. The rate was 7.875. We're bringing them down right now to about 6.5. Okay, so that's that. So then I'm going to plug in the fees, and I'll do this live with you guys here in a second. We're going to show the break-even points and a bunch of other things behind there. But his first question was, "Hey, Dan, can I get I just want to do my rate to get me from the 8 to 6 something that you guys are giving me that. I don't want any money out or anything else." That's called a rate and term. So if you can do that, in most cases, that's a cheaper way to do it because the banks look at it this way. If you're not looking for any money, okay, that means they're only going to lend you exactly what you owe on the house right now. Well, for them to approve your loan, you have to be, have no late payments, good credit, all this other stuff. So they're thinking, well, okay, you've never missed a payment or anything like that in the past. So, most likely you're not taking any money out to dig yourself a bigger hole. So we're okay with giving you the best rate out in the market. Okay. However, if you're looking to pull out cash, that's a whole different animal. They're saying, okay, what do you need the cash for? Why are you taking cash? Now there's a bigger equity position or a less equity position we have in your home. So we're a little bit uncomfortable with that. So we're going to raise the rate a little bit. So there is a very big difference. In some cases, if you're looking to do what's called a rate and term, just basically adjusting that interest rate, or maybe you're trying to shorten your term versus cash out. Okay, the cool thing on government loans like VA, FHA, and USDA is you don't need to re-verify your income or appraisal because it's kind of the same way. They're looking at it and saying, okay, we're refinancing your loan. You've never missed a payment on it, so you're in good standings. Your credit scores are good. Because you've never missed a payment, we're just going to say we don't have to re-verify everything, because to do a streamlined loan, you have to reduce your rate at least minimally 0.5%. So that automatically is going to bring down your payments. So they're saying, okay, if you can afford the house now, well, you'll be able to afford the house after the fact. So we're going to do this limited for you. We're just going to say all we want to do is pull your credit, and that's about it. So they're not going to re-verify your income, and you don't need a new appraisal. That alone is going to save you $600-700, and then all the anxiety with the income and everything else. Then you also, in most cases, because you don't need to bring money to the closing like you did when you bought the house, we probably don't even need bank statements. So there's some times where we can get the loan in and out and close within 12 to 15 days. So that's one of those pieces where you have to understand the different options when it comes to refinancing. Okay, so how will refinancing affect my credit score? Okay, here's one of the biggest misnomers that a lot of people think. They're like, I had one lady call me, this was a couple years ago, and she said, Dan, you pulled my credit, and my credit score has dropped over 30 points. And I was like, there's no way they dropped over 30. And she was adamant. So I finally got her on customer service call with us, with the credit agencies. And they're like, well, it did go down 30 points, but ma'am, did you just have a big charge on your Discover card? And she's like, oh yeah, I bought a laptop. They're like, well, that's what it was. You just spent $2,500 and you maxed out your credit card. It wasn't Dan's credit pool. So be very careful right before you go to apply for a loan. Don't go out there and buy all this stuff, because it is going to affect your credit scores. But when we pull your credit score, and I validated with the credit agencies, the most your credit scores can go down from a credit pool is 5 points. Most of the time, they told me the average is between 2 and 3 points. So a lot of people, they're concerned about their credit scores, but if 2 or 3 points is going to hurt you, you might want to hold off for now. Okay, so that's that piece of the puzzle. How will refinancing affect my credit score? It really shouldn't. That's basis on there. Can I get a better interest rate? Strategies to secure low interest rates. So I just posted a video the other day, and I hope you guys saw it. It's how do we, well, I have a slogan here: one application, one credit pool. We're going to shop your loan lenders. Now, how do we do that? So I'm actually a broker. So I work at a federal bank. This is the biggest piece of this puzzle you really need to understand. Here's what I do. I work at a federal bank, okay? Because it's a federal bank, I have a federal license. Okay, so I'm licensed in all 50 states as well as Puerto Rico. The cool thing is, the reason why we joined that team is they're growing and growing and growing. Okay, they asked us to move over there to support their growth. So currently we have 30 other lenders that we can work with. So here's the deal. You put in your application with us, we pull your credit. Now I have all of our products here at the bank to offer you, plus all these other lenders. So I can use their rates. I can use their programs. If they have a down payment assistance programs, I have access to it. If they have perks for the month, like sometimes they'll come up with like, hey, you got a free credit report this month or something like that, I'll get those for you as well. So my job is to, yes, get you approved in one, get you approved with the right program. But then from there, I'm doing searching, and kind of like your realtor, they're out there helping you try to find that house. Well, I'm out here trying to help you find that loan to help you get into that house. Make sure you're in the right program on that house. We're really competitive on those rates and fees, and that's why we have over 30 different lenders. So if you have the ability to do this yourself, God bless you. But I think it's a little more daunting than a lot of people think. So we'd love to take the heavy lifting away from you on that. So that's how to get a better interest rates. Reach out to us. I'm going to get you basically 30 quotes with one application. How much equity is it required to refinance? And it says minimum equity required, often 20%. That is not the case. It's not even close. And I'm going to get this one in a second. Should I choose a mortgage? That's completely up to you. Right now, basically, if you look over the rate sheets, the rates are almost the same on an adjustable rate versus a fixed. So in this environment, I've always done a fixed rate because I don't want the uncertainty of this. So I apologize, you guys. You can't even see these rates. So I'll try to adjust this if I can do here. Let me see if I can shrink. There we go. Okay. So you can see there's not a big variance between these numbers right here. So unless the spread's like 1% or more, I'm just going to take a fixed rate and worry about all those issues at another time. So that's my thought on the adjustable. But the adjustable rates are not like the adjustable rates they used to be. I complained for a long time. And if you understand what happened when the housing market, you understand how the subprime market was full of adjustable rate mortgages that were negative AM, teaser, this, that, all this other stuff. And they were bad. They were just really bad. Those loans are now outlawed, so you don't have to worry about getting stuck. Are there any prepayment penalties on my loan? Most loans, probably 99% of loans out there, do not have a prepayment penalty unless you have a non-QM loan like a DSCR program or something like that. Those are ones. Call us, and let's see if we can work with you on those. But in most cases, you should not have a prepayment penalty. And what are the tax implications? Nothing. There's nothing that you have to worry about. So let's get over to your questions, and please, answer the question that I posted up at the top. How many times do you think you can refinance on the house, the whole time you're there? I don't care if you're there for 10 years, 15 years. How often can you refinance? So let's get to the questions. Let's see what we got here. And better a nice move down on rates recently. Yep. It's been a fantastic time. And, when you're looking at the charts that we see, some of those, and I'm going to mention that in today's video at the closing bell, a lot of the charts look like the market's really moving, but I'll kind of give you the truth behind the scenes. If you look at it a lot of times, you'll see like the 10-year Treasury, it moved like 0.004. But the chart looks like it is just running out of control. So you have to pay attention to those little things. So, but great question. And thank you so many times. So thank you so much. As many times as you want. Oh, let's see if that person's going to be right. So just headphones, hang tight. Let's see what some of these other people have to say. Let's keep going down through. The next question is I locked at 6.25 VA. 30-year with $2,000 lender credit on February 14th. Today reached out to my lender and was offered 6.125 with $2,000 in credits as my lender credit as my no-cost one-time float down. I decided to hold off. Reach out to us. I'd love to help you with this or navigate this. We can scan that over, like I said, over 30 different lenders. Let me give you my caption right through here so you can reach out to us. Let me go through right here and just go to our website if you would, or shoot me an email. I'll put up my email address. So shoot me an email with your what you're looking for. Love to help you out if I can with those quotes. Okay, so let's get back to, hold on one second, folks. Let me go back to the chat button. Sorry, I'm working solo today, so doing my best. But thank you so much, Artalis. The next one, and I'm not pre-screening these, so guys, please be considerate of your questions. You know what I'm talking about. So I put 3% down on a conventional earlier this month. Do I need to bring 2% to bring a 5% equity to refinance? No. I'm going to get to that question in a minute. You can actually refinance up to 97% of your loan term. And again, these are questions. Please reach out to me. But yes, I would love to give you a quote or at least make sense of this for you. But many times, if you're looking to, you probably put 3% down, so you went with a Home Ready or Home Possible loan. So yes, you can refinance those at 97%. Sometimes you can go a little bit higher than that, but yeah, you should, as long as your house stayed steady, you shouldn't have any problems refinancing. You might even get what's called a property inspection waiver. We get those every once in a while if your equities position's pretty good, where you don't even need an appraisal even on a conventional loan. And I'm going to get to some of these scenarios here in a second with the different loan options for you guys. The next question that we have is, where is it here? We answered that one. Let's go to the next one. Tomorrow I will lock lower rates before I'm with you. So Artalis, are you a loan officer? Are you a bar? You're a client. So that's what I'm betting on. I'm not going into Friday's PCE data hoping that it comes up with a good number, because if there's a good number, we've already had a huge rally in the market, folks. So if it's a good number, you'll see mortgage rates ease. But if that number's bad, you're going to see mortgage rates spike fast. So it's a tough time for us to maneuver right now, because, if you're working with just a specific lender that doesn't have those 30 options like we do, once you lock, you're locked. Okay, so let me explain how that works a little bit for some people. So let's say you like a certain stock. Okay, and this is probably the best analogy I can make. Let's say you like NVIDIA stock, and you're like, I don't know, it's pretty pricey. It's went up 50,000% in the last 2 years, and so forth. But their earnings report's coming out tonight. I don't know if it's going to be good or bad. So if you buy it today, okay, if you buy the NVIDIA stock today, and the earnings come out later today and they're bad, and the stock just tanks, Well, you can't call your broker tomorrow and say, "Hey, you know what? I know the stock went down because the earnings was bad, so I don't want to, I want to cancel out my buy position from yesterday and rebuy at the lower price." It doesn't work that way. It's kind of the same way with interest rates. So you lock in, you're locked. Okay. And that's why I choose on my end. I want to have all these other lenders because if rates are starting to come down, I have the options. And we don't like to, we'll go back to the lender that we locked you in at, but we'll be like, the rates are coming down. Can you, help us with concessions? Can we do anything to help out this borrower? Otherwise, I'm going to have to withdraw the file and move it somewhere else. We have that luxury. Do we like doing it? No, but we have the luxury. That's what I'm saying. If you're with a bank, you're stuck. You bought it and there's nothing you can do. So if you're in that situation, that's when I suggest reach out to me. I might be able to help you get out of that scenario. But I'm with you on that one. I'm the PCE scaring the bejesus out of me right now. All right, let's get to the next one. We have is I put down 3%. Refi. Nope, I answered. Oh, I thought I answered that. Okay, let's get to the next one down here. I would refi every 7 months using VA Streamline Refi through PenFed, no cash refi if the numbers make sense. Okay, well, reach out to me and let's see if working with me makes sense. I don't know why you said PenFeds, but there's a lot of ways here. Let me go over this scenario. PenFed's no cost refinance. I can do the same thing. Every lender can do the same thing. Here's what happens is they increase the rate to make extra premium on your loan to then pay your costs. Okay, there is some cases where you can go in and like for us, we can waive some fees if we're the lender on the loan or something like that. Like, friends and families, you might get a little discount on some things and things like that. But there's more to the story behind the scenes when somebody's offering you a no cost refinance. So be careful of that. And then on this one, it says I refinance VA Streamline every 7 months. Well, unless you're disabled and you're waiving your costs, you're going to have VA fees every time you refinance, and it's usually I think it's 0.5 or a half a point on the loan, and then you have other fees on top of that and everything else. So it's not as simple and not as cheap as you think by doing that. Now, if you have a disability with the VA, you can refinance as much as you want because you're exempt from all those fees. So be careful if you got a VA loan not to do it too much. It can get expensive. Great question. Thank you so much. If home values fall, your equity falls. That would be correct. Are assumable loans realistic? If so, how do you find them? I don't have a clue on how you find them, but here's the tough thing is you hear a lot of talk about it, and it's a lot of talk. I've never seen one that I can recall. I might have saw one. I've never seen one really go through, especially VA. Because what happens is you don't, there's a lot of spreads. So here, I'll just put up an example. Let's say I'm trying to sell you my house at $300,000 and I have a VA loan and I owe $200,000. Okay. You can assume my VA loan, and then you have to come up with $100,000 more to kind of do that transaction. You have to go through that lender and apply, get approved through them, the whole process. So can it be done? Yes, but it only can be done on government loans, FHA, USDA, and VA. It cannot be done with conventional loans. So if you're with a conventional loan and somebody's trying to assume it or whatever, those aren't assumable. So those can get pretty difficult. Let's go to Brandon. Brandon, thank you so much. Why do they call it over when you in the cold food and hot food? I have no idea what you're talking about. I'm going to skip to the next one. How soon after closing on a conventional can you refinance? Well, let's get over the great question. Christina, let's get over to my next slide. Here's what we're going to talk about next. And this is going to basically drill down a lot of this information for you guys. Okay. So again, I did this through DeepSeek. Not all of this information is completely accurate. So I do want to show you this information, debunk some of these things just to give you guys the truth. Okay. So let's start breaking down each one of these categories so you understand it. Okay. So the first thing is we're going to look at conventional, FHA, VA, and USDA. All right, you go down through here. What's the time frame for refinancing? On a conventional loan, if you're not looking to take out any cash, it's immediately. Okay, immediately. It says on the screen 6 months. And then it says for rate and term. That is not correct. You have to wait 6 months to use the new value. And then you get a year to be able to use the new value and pull out cash. My apologies. Let me rephrase that. You can refinance a rate and term for the first, right after the closing, using a new appraisal, as long as you're not taking out cash. Okay. If you're taking out cash, you have to wait at least 6 months to pull out cash. You have to wait 1 year before you can use the new appraised value of the property. Okay, so that's that thing. When you're talking the government sponsored loans, such as FHA, VA, and USDA, basically the rule of thumb is you have to make on VA and FHA, you have to make 6 payments. And then you can then go out and refinance. With USDA, it's 12 payments. Okay, so those, it doesn't matter if you're looking for rate and term, cash out, or whatever. That's that. So now the answer to that question, the young lady who asked says, do I need 2% more equity so I can refinance at 95%? Well, no, right through here. The maximum you can refinance or rate and term up through here, and it's a Home Ready or Home Possible loan, is 97%. With an FHA loan, you can go to 97.75. And with a VA and a USDA, there you can go to 100%. They're streamlined. They really don't, that doesn't come into consideration. That answers some of those questions for you guys as well. Now let's get over to the FICO scores needed on. So most of these I'm going to go through are accurate. Okay, FICO score for conventional 620 and above, yes, that is accurate. For FHA 580 and above, yes. VA 6 and above, this can be altered a little bit. The same thing with VA. So if your scores are a little bit lower than that, yes, you can qualify. So these aren't 100% accurate. Now, the closing costs, here's where it's kind of okay. So, well, let's scrap the cost for right now. I'll go back to some of these questions that you guys have. Let's see what we have here. We got R. Tullis, Chris, use Rome. Okay, you guys are talking back and forth. That is awesome. Guys, let me know. Do me a big favor if you guys would. Just post a comment if you're watching this video. Just let me know where you're watching from, because I'm trying to get people from New York all the way out to LA. So hopefully this time frame works for everybody. Let's go to the next question. Are the rates for the loans for second homes going to be substantially higher if my primary home is paid off? Nope. We actually have a lender right now that does not have any adjustments on second homes. So if you're looking to buy or refinance that property, reach out to me. I'd love to help you. There's no price adjustments with one specific lender that we're using. This is exactly why I keep saying this is why a lot of people are finding us and using us, because I started that slogan, and now people are calling like, hey, Dan, I see that you can shop over 30 different lenders. I'd want to work with you. So now they're starting to understand what we do and how we do things. So yes, this is one. We have one particular lender that doesn't have what they call loan level price adjustments. So my information is down below in the description. Please reach out to us. You can even put in your application or even schedule a consultation with us down below in the description. But thank you so much for joining us today. Next one is, what are the chances of interest rates going down in the 4s this year? I'm going to say 0. And there's a lot behind that. And until you start seeing the 10-year Treasury, the 10-year Treasury is going to have to get to the 3% handle for this to happen. It's at about 4.25 right now. So I don't think the Fed has about 100 basis points, 1 full percent to cut. I don't think they're going to cut that much, and it's not going to happen this year as well. And you're probably not going to see that over, hopefully your lifetime or my lifetime, because the only reason why they got really low during that time frame a couple of years ago is because COVID, and the government was pumping in a ton of money just trying to keep the economy rolling. The Federal Reserve was involved and everything else, and they basically put rates at historically low levels, and that's what was the euphoria in all the markets, the housing market and everything else. Because I on my house, I just looked up the other day, so I'm going to have to give you a correction. My mortgage rate on my house is 2.75 on a 30-year fix. Yeah, I took a 30-year fix back like 4 or 5 years ago. It was like, well, it's almost free money. So now I put my money in the market. Today's not a good day in the market, especially with Bitcoin, but it's worked out over time, because the markets, when I talk about the markets, I talk about the equity markets. They usually yield on average about 7 to 8%. So I'm like, okay, if I can borrow money at 2.75 and then put my money to work for me, and I'm making, maybe 5, 6, 8% a year on my money, good trade-off. And that's what I did. So next question is, thank you so much for the question. No fees. I am 100% then right on the button. So hopefully I was on point there. That's what I was saying. And if you posting down below, to validate, there are fees, when you're looking to do a VA loan. But if you have a service connected or disability, you're exempt. And God bless you, brother. For I don't mean to say brother if you were a lady or whatever, but God bless you, if, for your services, and I hope you're okay. Let's go to the next question that we have. What are the current year, 30-year fix? This is the exact question I get every day. Okay, so I'm gonna respond by this. There's a lot of factors that come involved with the 30-year fixed. Okay, it's going to be these, and these are the main criteria that you're going to ask, or you're going to we need on our end to do this. And here's my analogy: is me like asking you, why doesn't my car start? Well, I don't know, but I'm going to tell you, you can't check under the hood though, and you can't check and see if I have any gas. My whole point is, well, how do you want me to fix it? I don't know. So when people ask me, what's the 30-year fixed rate? Well, I can tell you, I can just go to the screen and say, well, right now it's 6.8, but the factors that go into this, I don't know if you watch my channel every day, but to get this rate, this isn't any single bank's rate. Mortgage News Daily, they survey lenders all over the country, and they ask them 5 questions, like I do on my videos. The 5 questions are you looking to buy that first house? Is it going to be a single family home? And is it going to be your primary home? Okay, those 3. Then if you click here, there's always that fine tuning of things. You go down through here, and if you blow this up, you can see right through here. This person has a 75% loan to value. That means they're putting down 25%, and they have a 780 credit score. Are pertinent when it comes to your interest rate. Okay, so the questions that you'd need to have answered is, what is my credit score? What is the house's value? How much am I putting down? So that's my loan to value. What kind of property is it? Is it a single or a 2-unit, a 3-unit, a 4-unit, a condo, a townhouse? All these things. Is it going to be an investment property? Will it be a second home? Will it be your primary home? Those are all the things that factor into what is my 30-year fixed rate. So if you'd like to get a quote from us, please just schedule a consultation, shoot me an email. Love to dive in deep with it for you. But right here, I can't, unless I get a lot more details, I really can't. So, but that's how mortgage rates work. All right, the next one is, I have a 6.5 interest rate on a conventional loan. Would now be a good time to refinance? No. And this is one of the questions we get all the time. So here's what we're looking at. Well, it depends. If you have a 30-year fixed rate right now, so you're in this category up here, and your rate is 6.5. Well, the average rate right now is 6.8. So we're not even close to where you are. So to make it make sense for you to refinance, you're probably going to need a rate about 6%. Okay. So when you start seeing on the 6% level, that's when you give us a call. Okay. But until then, and I wouldn't suggest, some people are reaching out to us saying, how much money and points would I need down? And it does get expensive. So I'm not the proponent of saying, okay, let's buy the rate down. I would be at the proponent of just refinance and get that rate down. And then if they go down again, refinance again. Because again, we were talking over the questions at the top. One of the biggest things is you have to pay attention to, what are the fees and the points right through here. That's number 2 question people always ask. How much is it going to cost me to do this? So, and again, that's why we're doing today's video. So let's get back to it. So those are where rates are today. We'll go back to your questions, and I'm going to go back to that screen right there. So let me go over, let's see. I'm going to answer one more question here. I'm going anywhere. I just want to go over to the refinance calculator so we can start plugging in some of these numbers to show you how all this works. What's the closing cost for an FHA Streamline have? Well, I'll tell you what ours are. But there's one piece of this puzzle I don't know. I don't know where you live. Okay. So with us, normally there is no underwriting fee, no processing fee, no origination fees. There's usually no fees. You get a loan estimate in the origination piece of the puzzle. Okay. But when you're going to call in, like in yours, the FHA Streamline, the next thing is you don't have an appraisal fee. You'll have a credit report fee that might be about $100. And then you'll have title fees, and title fees vary. If you're in Illinois, like I said, they're about $985. Other states, it would be basically, we can pull a quote and let you know what those costs would be, because that's one big piece of this puzzle. And we're going to show that here in a second when we go over the how long it's going to take you to recover your costs. So I would suggest you reaching out to us, just giving us your information. I can give you a quote back saying, okay, here's what the rate would be, and here's what your cost breakdown would be. But in most cases with us, like I said, especially with a FHA Streamline, you won't have any appraisal needed. we don't even need to re-verify your income. Basically, it's just going to be, we're going to pull your credit and we're just going to get a bunch of paperwork together for you and work with you, with our lender, to get you into the FHA streamline to get it done. And we can usually get those done in about 10 days. So the cool thing about FHA too is, let's say, for example, you get the ball rolling now and we close the beginning of March. Let's say we close the first week of March. You're not going to have a payment in March or April. So you'd skip 2 mortgage payments. So that helps a lot of people through this as well. So let's get over to one more thing that we have here. Let's get over to, not one more, we're going to go back to your questions. I just want to show you how this loan calculator works. Now, it is down below in the description. The one on our website, I'll be honest with you, I don't like it at all. So I have this one down below. It'll have my picture and that stuff on it. And here's what you do. Here's a loan we're working on with somebody right now. They have a $365,000 loan. That's how much their original loan was a couple of years ago. 7.7 rate on a 30-year fixed. Okay, right now their payoff is 364. Well, in change. There was $2,500. This is actually wrong. No, there was $2,500 in fees on this one. Actually, we just got them 6 points. We just locked them in today. Actually, the numbers are going to look like for this person. Their payment's going to go down about $300 a month. They're going to save, if they stayed on this, they'll save over $1,000 in money. And then you go down through here and there's their break-even point. They're even after 8 months, they're broke even. So from there on, it's a savings. So this all works. So if you want to be able to save, $300, and there's other scenarios with this. I have people calling in that have 8.125 rates. And now, if you look at let's just say you go over here and say rate, FHA 30-year fixed FHA is 6.1. Let's say let's just assume this was an FHA loan. So I go down here to 6.1, and how much is that going to change? It'd be 1.25. Interest rates always trade in 8s, folks. So just so you know. So if anybody ever says, 1, it's actually 6.125. If it's 6.2, it's 6.25. That's how it goes. So this person now saving $308 a month. That's why they're doing this. And their break-even point is 6 months. So after 6, it's money in their savings in their pocket. That's why people were doing this. And that's why I wanted to get out, because when this person called me, they're like, well, can I don't even know if I qualify. How does this work? And I'm like, yeah, here, I'll walk you through it. We're able to save them almost $400 a month. Count me in. That's a car payment. Okay, so that's how this works. This is down below. If you like the numbers, just shoot me an email, and I'd love to talk with you. We are having here. Let me get to my website here for a second, because we're having major problems with my website. So I'm gonna give you my email address directly. My phone system should be back up later today. But to find out all this stuff, go to therateupdate.com. There's a couple different ways to reach out to us. You can hit the apply now button. We really want you to schedule a consultation, because we basically just do this right with you on the phone or on Zoom. You can go down through here and you can email me, and here's all my information right down through there. So if you've called us and for some reason you're getting a busy signal or something, please just email me for the next 24 hours. I will respond, and most likely I'm just going to call you and go over any questions that you have. So that's that part of it. Let's go back to this scenario. So let's go back to any questions that we have. Let's get to it. VA is 120 days to refinance, 7 months, not 6. 7 months, not 6. Yeah, it was. If you look at it on here, I think it was on there like that. Let's see what it is. VA. Did you say VA 7 refinance, 7 months, 6 months? Okay, I'll take your word for it. I always thought all of those were you had to make 6 payments and then you could do it. But thanks for clarifying that. The next piece of this is NVIDIA earnings just came out. They surpassed. Are you kidding me? What's the stock doing? Here, let's go over to it. So NVIDIA's earnings were coming out after the bell. I'm just going to hit this. Let's see what's going on. Oh, you got to be kidding me. So what's the aftermarket doing right through here? Did the markets closed? Yeah, they should be closed. Okay, well, great context. Sorry to be distracted, folks. I just wanted to look up the NVIDIA stock. Their earnings came out, and I'm like, if their earnings come out real good, it might not be great news for the bond market, because people might be pushing money back into a little bit riskier assets. So thanks for bringing that up. I greatly appreciate it. Let's go back to this thing. All right, so let's get back to it. But thanks, Dan. I appreciate the NVIDIA earnings report. I don't know what this one is. It is JGR. What is the best tips on paying down interest being on a mortgage? What is your best tips on paying? Call your lender and set up a bi-weekly payments. Trust me, it'll be the least amount of pain on you, but you're going to pay off that house much quicker. I think there is about 6 or 7 years quicker than normal. So that's what I would do to not have a big shock. Instead of sending in one big batch of money, you can do that as well. I would, if you don't have a chunk of money sitting on the side, what I would highly suggest is just going in and calling your servicer and just asking them if they can set you up on bi-monthly payments, and you will see a dramatic drop in your interest. So this person says, "Pay." Oh, they my apologies. Somebody actually answered that question for me. So, hey, great minds think alike. Thanks for coming. Washington State. Okay, Washington. I don't know the fees. Oh, thanks, Washington. We got Texas. We got, come on, folks. Help me out here. There's 70, 80 people on here at least. Help a brother out and give me your information on where you live. We are in, thank you, Christina. We're in Meridian, Idaho, looking to refinance after taking advantage of closing with the builder, $10,000 incentives instead of buying the rate down. Fantastic. Please reach out to me. I'd love to help. And actually, like I said, you could see how we scan the lenders all over the country, and we do it. That's what our goal is. The simple process a lot of times for us is we have, everybody on my staff has probably 20 years in this business or more. We know the lending programs. Where we can help you is behind the scenes with our expertise. Is, we have connections with realtors, we have connections with attorneys, we know the programs that we're going into. Plus, we're working with 30 different lenders. We have all their products available. There's no other place you can go and get that. So thanks for Dan, what did I skip your question for, bud? Just post it down below one more time and I'll get to you. I promise you I'll get to that here in a second. You can post it here fast. I'll answer one more and scroll down and find you, buddy. Credit DTI. Okay, let's get over to the DTI factors on this. Okay, so let's get down to it. Oh, we were down to FICO and the debt ratios and so forth. So let's go back to the chart that we were looking at on different programs on what it takes or what the qualifications are to do a refinance under each one of these. So remember, conventionals first, FHA, VA, and then USDA. So let's scroll down. Minimum FICO, we went through that. That is correct. The closing cost there, oh, it's not even on there. So let's go through the debt ratio. With a conventional loan, you can go up to a 49% debt ratio, maxed out totally, period, 50%, you're dead. FHA with a streamline, there is no such thing as a debt ratio because we're not putting in your income. VA, kind of the same thing. USDA, you will have to verify your income and things like that with USDA, but with the other programs, there's no appraisal needed and no income verification. You're probably sitting there going, that's good. So that's that case. All right, Dan, where's your question in here, buddy? I don't see it. Let's see it. I'm going to scroll all the way down. Here we go. Let me see if it's down here. I'm at 8% interest. Should I wait further for rates to decline? I think you'll continue to drop. Okay, here's a saying that I used to say, and I think this is one of the ones that was on Yahoo Finance. So if you didn't see my video on Saturday, I was actually quoted in Yahoo Finance, a quote like this. Well, it's not necessarily this, but I'll say it. This is the perfect example of what we faced in like 2020, 2019. I had people at 5-6% interest rates, and the rate got to like 3, and they're like, "I'm just going to wait for it to go to 2.9." Then it gets to 2.9. I'm going to wait for it to get to 2.8, and they would go all the way down. Then all of a sudden, rates went poop, and they lost out. So if you're at 8 and you can get 6.5 and save $300, I'm for it. But we have to focus in. What are your fees? Because here's what I would do. I did this on my two of the last homes I had. I would refinance every time the rate would save me $200-$300. And my costs were, because I do my own loans, my costs weren't that much. But I'm like, okay, I'm just going to keep doing this and just keep working my way down to where I want to be and not leave money on the table. What I'd suggest you do is refinance. Well, let's see what the costs are to refinance. And then if your break-even point's 2, 3, 4, 5 months, and then let's say next year rates come to 5.5, we'll do it again. You got nothing to lose. Every time you're sitting on that 8% rate, you're paying that interest every month. Why? If you can get a maybe 6.5% rate and bring down that payment. So I understand your thoughts there, but that's why I wanted to go over this video today, is because, let's say your costs are $1,500, $2,000, and your house payment's $2,000. Well, you're going to pay $2,000. Remember I said you're going to skip 1 or 2 months. So let's say you take that $2,000 that was in cost, you refinance your loan. Okay. Then your first payment comes due and it's $300 lower. Fantastic. You really, if you think about it, there wasn't really anything there missed. So then 6, 8 months, another year goes by and rates drop another 0.5%. We'll do it again. Okay, you're going to skip a payment. So here's what I would suggest you do, though. You might want to look at not extending your term. Okay, so if you're in a 30-year fixed and you've been in there 2, 3, 4 years, we can reset that loan back to a 26-year loan or a 27-year loan instead of going all the way back to 30 years. Now, you might just want to say, I'll just go back to 30 years because that'll keep my payments as low as possible, but you kind of reset that interest clock. So my goal here is also not for you to pay a ton of interest. And that's why we're also focusing in on, refinancing as the rates continue to come down. So thanks, Dan. I apologize about missing that. Oh, you have one right above here. I would refinance now if I that's my saying. Okay. It's I'm at 8. Okay, let's get over here. Next question. Why do some lenders want cash to close on a streamlined refinance? Oh, so here's what that is. Okay, so it's not like here's the best way to answer it. You've on a streamline, for example, like let's say FHA. Let's say your payoff is $250,000. So it's $250,000. But the money, part of your closing costs, and this is what gets confusing, we have to reset up your escrow. Okay. So when you bought the house, you probably had to set aside 2 or 3 months of your taxes and insurance to set up your escrow account. Okay. So when we refinance you, that the old lender that you're with or the current lender you're with, what they're going to do is send us a payoff letter, but your escrow money is just going to sit there. They're actually going to refund it directly back to you. So when we reestablish your escrows, we have to fund that account. So it's going to appear that you need to be, bring in $2-3 grand, but you should already have that in your kitty in your escrow. So the easiest way to tell this is grab your most recent mortgage statement. Right on the statement, it's going to show your escrow balance. You're going to get that check back once your payoff goes through. Okay. So that should pretty much offset the amount of money you would need in the streamline to bring to closing, if that makes sense. Because we can only, with a lot of these streamline programs, your loan amount can be the payoff plus 30 days of interest. Okay, on that. And then sometimes they'll add a little bit other things in their buffers, but it doesn't account for your new escrow setup. So that's why it's appearing that the lenders are having you bring cash to closing, but that cash is actually yours. And that's why you're getting that as a refund back once you pay off that current loan. So hopefully that makes sense for you. Let's go to the next one. Do you do DCR loans as well? We absolutely do. They're called DSCR, and they're debt service coverage ratios, and those are on investment properties. So if anybody out there has an investment property, and here's this program, and I'll explain it to you guys. It's simple. If you're an investor, this is the way to go. All we do is your credit scores have to be good. It's 20% down if you're buying. You have to have a 20% equity position in those loans. And then as long as when we get the appraisal, as long as the rents being received equal to or higher than what your PITI would be, you qualify. It's as simple as that. You can also close in an LLC or a company's name. So yes, we do those, and they are hot. They're actually on my list to do. I'm going to do 2 videos in the next couple weeks. One is on reverse mortgages and one is on DSCRs. So thanks for asking that question. I appreciate it. Let's keep going down through. I don't know if I'm going to dupe out for some of these. Let's see. No one knows if the rates will continue to drop. I'm with you on that one. I'm just going to scramble around now at this point. Good options is to go for no cash refinance with slightly higher rates. Okay. I don't know which one that goes to. All right, let's get to the last one. And I have a 7.5 rate FHA. Does it make sense to refinance? Bought the house last year. Absolutely. Actually, if you're with us, Alexis, I'm not sure if you're with us. I've been, that was my goal tonight. I'm going to start calling a lot of people. We have a lot of people in our database that we closed last year at 775 and above. So Alexis, please reach out to me, because if you look at today's rate on the FHA, it's 6.15. So if you can drop, a point and almost a point and a half, it'll be a huge savings. So please reach out to me. Let me give you all my information here one more time, folks. Let's go back to my captions. And I think that's it. So, nope, I want you guys to have my, there. So please email me. If you guys have any questions, our phone systems, they are, for some reason, I don't know if somebody's messing with us or not. My phone number has been ported out two times over the last 2 weeks. And when they get ported out, I'm down for the whole day. So it happened 2 times recently, and I don't know what's going on. So I got both of my companies working on it to figure out what in the heck's going on in the background. So let's see if we got any more questions. Let's see. Did I miss you? If I missed you, post your question real quick. Let's see. We got a couple of DSCR loan questions and so forth, but that should be it. If anybody else has any questions, if not, that should do it. There we go, Alexis. I would love to. We'll send you. Awesome. So thank you so much. So let me go one more time to recap all this stuff. If you're looking to refinance, one last caption of this is, let's go through the top 10 questions real quick so you understand it one last time. When is the right time to refinance? Well, hopefully if you learn at this point, it's when you're ready and when you can save money and when that break-even point is. What I try to always do, have it less than a year. The shorter the break-even point, the better. But have it, if you can recover within a year, you should be in a great position. And then if rates continue to go down, you can look at cost-effective ways like, the streamlined programs and things like that to use when it comes to that time. What are the closing costs? Like I said, they're just a fraction of what you paid in most cases when you're refinancing versus when you bought. Break-even point, you'll find that right on the calculator there. And like I said, the calculator will be down there right below. So that's that part of it. What types of refinancing there are there? Well, if you need cash out, this is a good way to do it. But if you don't need cash out, it's even a better way because rates are usually a little bit, they can be a pretty big spread there if you're looking for cash out versus no cash out. So if you can get away with a no cash out refinance, that's the way to go. Refinancing affect my credit score? Nope. The maximum, yes, the maximum it could is 2 to 3 points. Can I get a better interest rate? Well, that's the whole point of doing the refinance. How much equity do I need? You just learned today, in most cases, you only need 3% equity. Fixed or adjustable rate, prepayment penalties, and tax consequences. So that is it for today. So let me finish up by saying this, and I'll give you here's my website. If you need some assistance with this, folks, we also have this right here. We just created this tool, and I don't know why it's on the side of here. I keep asking the publisher to put it in this cell right through here. But if you want me to track this for you, just go click right here, the RateWatch. You're just going to click it. And what it's going to do is it's going to take you to this form right here. Just fill it out. Let me know, what you have right now. Basically, these are the questions that I asked. Remember when I asked, the person says, "Hey, what's your credit? What's today's rate?" I don't know. There's questions I need. This is actually going to fill in all those questions for me. Then give me your current rate and what rate you think would be make the most sense for you to refinance. You can fill that in, and when that rate hits that, I'll be calling you. You better be answering that phone. So that's that for today. And I think we might have Christina. Did you ask one more question? If you did, I'd love to answer before you. Here, let's get to. Do multiple families have different refinance rates? Some cases they do in a rate and term. If it's your primary home, a lot of times 1 and 2 units will be priced the same, and 3 and 4 will be pretty darn comparable to those. Yeah, so it depends on the situation. So I don't mean to be vague, but a lot of these are really tough. For conventional financing with having 40% equity and being self-employed, do you have to submit all docs again, or is it easy? For a conventional loan, I would need if you've been in business over 5 years, I only need 1 year of taxes. If you've been in business less than 5 years, I'll need 2 years of taxes. And if you qualified then, you're most likely going to qualify again. So that'll do it for today. So again, go to my website. You can fill out that information. But if you call in, I am going to say, I don't know why we're having problems with our phone systems. But if you do need some help, please just visit us at therateupdate.com. You're going to scroll all the way down to the bottom. Here's our 800 number. But right there again, that's my email address. Please email me. I'll be calling you personally, go over any questions that you have, answering those questions. And that's what I'm here for. So thank you so much for watching, folks. I truly, truly appreciate you being here. Check out tonight's closing bell, where I'll be posting what the heck NVIDIA did and what the market did from there. And then tomorrow we have, I think, unemployment coming out tomorrow, as well as the GDP. And then on Friday, we have the PCE, the number one inflation number that the Federal Reserve monitors. That's coming out on Friday. Folks, I hope they're right in line to what expectations are, because if they're not, it's going to be bad. So let's get to one last question, folks. This is it for the day. So we're busy buying houses and locking the rates. A few tariffs was announced. Seems like a renegotiation. The rates is very high. Better to wait and refinance in a year. If you want to wait, you're more than welcome to wait. So thanks for watching, folks. Greatly appreciated. If you like this video, please give it some comments down below. Thumbs up, share it if you would. If you haven't subscribed yet,